Hello, everybody. Welcome to Outside the Bucks, the podcast devoted to supporting Central PA's small business. I'm your host, Derek Bixler. With me to my left, and I always point the right way now, I know it now, is Melissa Mueller of Keystone Alliance Mortgage and Capital. And we'll be talking to her about commercial real estate loans, the ins and outs, and what you need to look out for and be ready for. But before we do that, like I said, I'm Derek Bixler, realtor and digital marketing geek right here in Central PA. I grew up on the hill in Harrisburg, went to Mechanicsburg High School, go Wildcats, and went up to Penn College of Technology up in Williamsport, if you know where that is. Been having a bunch of sales jobs since I got back here and been selling real estate ever since for the last 15 years. If you need to buy or sell a house, text me, email me, throw a rock through my window, send a carrier pigeon, whatever you need to do, reach out to me. We still need inventory. We were just saying it right before I clicked the button to go live that the housing market's pretty crazy, and she does lending on the residential side as well. So we both know how that's going, and I've got some showings with a bunch of buyers, and I'm hoping to maybe get a house, but it's tough out there. So if you have something to sell, reach out to me. Good time to do it for sure. Subscribe to our weekly email at support.centralpa.com to get networking mixer updates and invites, episode announcements, and exclusive special offers, of which we will not have one because you can't really do any kind of special offer with lending, but you can get a free call with her, which will tell you how to do that. If you're on Clubhouse, follow me. I'm at Agent Derek. We'll be doing new rooms there soon. If you have a question, put it in the comments. If we don't see it during the episode, we'll come back later and address it. Or if you just know one of us and want to say hi, feel free to put that in there also. A reminder that replays are on YouTube, Instagram, LinkedIn, Facebook, all the places you want to consume your content, and also on audio players like iTunes and Spotify and all that stuff. Spotify is putting a lock on all the podcasts. All my podcasts seem to be moving over to exclusively Spotify, which is kind of annoying. Now I have to completely change my players and my playlists. So anyway, I'll stop yapping. Melissa Mueller of Keystone Alliance Mortgage and Capital today, talking about commercial real estate loans. Before we talk about commercial real estate loans, let's talk about you. Where'd you grow up? I think it said in your bio, York, and then you moved to Chambersburg?
Yeah, I was born in York, and then in 2000 moved to Chambersburg, graduated from Chambersburg High School. So yeah.
And what did you do in high school? Did you play any sports?
Yeah, I played field hockey. I was also in the band and also orchestra, chorus. I was always in extracurriculars, so I like to be pretty busy, as most people know. So.
What'd you play in the band? I played the trumpet. I was first chair. I'll add. Not in high school, actually. Let me qualify that. Junior high, and then I moved to Mechanicsburg. In Harrisburg, it was kind of cool, okay to be in the band. Then I moved to Mechanicsburg, and there was something like uncool or, that kind of thing. So I was like, I don't want to do it. Plus, it was like an extra class. In Harrisburg, we got out of class to go to band. And when I moved to Mechanicsburg, it was a whole extra class with like curriculum and homework and stuff. And I was like, forget that. But anyway, what did you play?
I played the flute, and then senior year I played the piccolo. So I loved that. I almost played in college, but I just decided to go a different route. It was like almost like a varsity sport in college, basically.
And you're in marching band and orchestra?
Yep.
Which are the same thing, essentially. It's just one you march and the other one you're sitting down, right?
Well, no. So I played the flute in the band, and then in the orchestra I played the viola. So different instruments.
And do you still play them?
No. I could probably pick it up, It's like riding a bike, right? It all comes back. Muscle memory.
I like to tell myself that. I've got with the trumpet, I have a couple trumpets sitting around, and I'm always like, I should start playing again. And I would like to do it. It'd be fun, but where do you go to practice? You can't really practice it. I mean, you got to put a mute in it or go to some place or join something, or it's not like a guitar is kind of loud too, but I don't know. Do you still have them? Are they sitting around?
Yeah, that's true. I do still have them. Yeah, they're at my parents' house. So I'm sure once they clean out the house one day, I'll get them back. But
when they force you to take all your stuff when they move or whatever.
Yeah.
We're on a bit of a delay, I can tell here. It's a long delay, actually. Maybe you're far away. It's like she's in Europe or something. But anyway, my next question before this delay happens is, so you like music. What did you do in chorus?
Yeah. In college, you mean?
In chorus. You were also in chorus in high school?
Yes, chorus. Yes. Yeah. So I sang the alto, basically like the alto line, not the soprano. I can't go that high. But
plays, musicals, and that kind of stuff?
No, just like chorus. I didn't really want to get into drama, like just because I was into other things. I played field hockey, I played softball, so I had a full schedule.
Yeah, field hockey, those are on opposing, those are not on the same schedule, the same time of the year, obviously.
Right.
And then you didn't play in college just because you didn't want to, or you
I wasn't good enough.
couldn't. I mean,
for
obviously it's
hockey.
hard to play anything in college, but did you just say, I don't want to do it,
Yeah.
or?
No, I wasn't really good enough to play like varsity. You have to be really really good. And I just got involved in other things. Like I went to Penn State for college and got involved in Penn State dance marathon, and I was volunteering. I did other things. So
Penn State, what? Dance marathon?
yeah, the dance marathon. They call it Thon. It raises money for pediatric cancer.
Oh, that's that thing where they're always out on the corners all the time. That's what that's called? I didn't even know that.
Well, they're raising money for Thon, THON.
Gotcha.
So
but
it normally
dance-a-thon.
happens in February. Yeah, yep. It's like a 46-hour dance marathon, and it raises money for pediatric cancer. And it supports like the Penn State Health and the Children's Hospital. So.
Huh. And then what do they dance? They dance for, there's actually like an event that you can watch or go to, or what?
Yeah. It's 46 hours. The dancers don't sleep. They don't sit down for 46 hours, and so they're kind of like zombies at the end of it. But there's music going the whole time. Basically 24 hours a day, and it's in February, and you can go to it physically. It's at State College, and then also they do virtual streams now. So. I don't make it back often, but a lot of times I'll jump on and just watch it on the live stream. So it's normally like February, like 12th. It's somewhere around there, or the third week in February. So.
Huh. Have you ever done it?
I never danced. I was a volunteer, so I was part of like the operations committee, which oversaw like basically everything, making sure the event went on smoothly. And so I was a captain senior year, and we planned the entire thing, which was awesome. It was cool to be kind of behind the scenes. But I've had a couple friends that were dancers, and yeah, I don't know how they did it. It's such a commitment.
I would assume that a lot of that time you're just like barely moving. If you're doing it for, what'd you say, 46 hours?
Yeah, 46 hours. Yeah. We, as captains, like we had 2 sleep shifts. I remember we had 2 4-hour sleep shifts throughout the whole weekend, but we also started like getting everything ready on the Thursday, and then we had to clean up everything on Sunday. So it was probably the longest time I've ever been awake or with that
I didn't know
little
that.
sleep. So.
Yeah, I'm sure there are other people out there that have seen it happening, and every once in a while, the Penn State people are standing out and collecting money, and a lot of people see that and don't know what it's about really. So it's kind of cool to find out, and there's actually a thing. So can you get? Sorry to talk about this so long, but I kind of like this and want to bring awareness to a good cause.
It's good. It's good.
Yeah. So the people that dance all that time, do they also get sponsors or something for dancing so many hours, or somebody sponsors you to do that, or how does that? What's that about?
Yeah, so they have different organizations that they're a part of. A lot of it is, if they're a part of like a Greek organization, like a sorority or fraternity, but then they also do have independent organizations as well. And they collectively raise money, and then, so much money, equals so many dancers. And then there's a couple that are independent dancers, and you have to raise against, I don't know what the exact dollar amount is, but then you basically go into like a lottery, and then they pick, I think there's normally like 700 dancers. So that's a big, way for overall for the money to come in. And then obviously throughout the weekend, there's different opportunities to donate as well. They do get, some corporate sponsors. But yeah, it's awesome. I mean, they pay for, all the money goes towards the Children's Hospital. A lot of it goes towards cancer research. A lot of it also goes towards, paying the bills so that the families don't have to pay anything out of pocket. It's hard enough to have a child with pediatric cancer, and then to have that burden of the medical bills. And so that the Four Diamonds Fund is what it's called, that pays for all of it. It's a phenomenal organization. Yeah, definitely can't bring enough awareness to it, just because it's been around for decades, but still not that many people know about it.
Yeah, that's awesome. I appreciate you explaining it. And hopefully next time everybody that's watching sees this, people standing out there, they have a little bit more of a connection to it and will maybe dig in their pockets a little bit more. It's hard. It's kind of tough these days. They should have a credit card reader out there too, little square reader, stick that in people's windows because nobody has money these days. I wonder if it's harder to raise money. And the homeless people too must be hurting on the sidewalks. I always give them food. If I have some food in my car, I'll give them some food, but I usually don't do money. Anyway, so in college you did that. Did you just like helping people all your life and decided to do that, or what got you into that in college?
Yeah, so I actually changed my major. I was a finance major the first year, and then didn't love accounting or business statistics, and then I got involved with fun, and then changed my major to social work. So yeah, it's definitely had a huge impact on me. And then out of school, I did the social work thing for a while, a couple of years, and then decided to go a different route. I've had a couple different careers over the past 10 years, so different industries. I feel like every couple of years I change. I get bored, so.
How old are you?
33. I just turned 33.
Yeah, so you're still pretty young. We all go through a few things before you find the one thing, and this probably won't be the very last thing either, or the final. I know Andres might be hoping it is, but anyway, what was I going to say? Oh, so this is a big delay here. I'm like, say a joke, and then 3 minutes later, you're laughing at the joke. I got off topic there. Oh, so you did finance. You wanted to do finance, and then you got into the social work, and now you're doing finance again. So did you, when you were younger, like math or like finance, or is there something driving you back to the finance all the time?
Yeah, well, it's funny that you asked that. I mean, my brother had an influence on me. He works on Wall Street, so he's always like chirping in my ear about that. But I think ultimately, like, this job is a perfect mix of everything I've wanted to do. I like to help people, so I'm doing that now. I like to, I work with first-time home buyers, but also, investors, really getting into the game. And then, I really enjoy real estate in general. I just think it's fascinating. The commercial side I think is even more intriguing, but, just being able to combine both of those, helping people and then, the real estate, and then now doing the numbers behind it all. It's kind of the perfect mix. So
yeah, you get to help people and do the numbers all at the same time. And like you said, the commercial side of it is a lot more creative and a lot more different things you can do and a lot more involved with it. So it lets you be creative and kind of get those juices flowing rather than residential where it's kind of a couple products and everything's somewhat the same. But and you're a broker, so you're going through all kinds of stuff, which we're going to talk about in a little bit. So let's talk about commercial real estate loans in general.
okay.
What maybe a few things that people should know about commercial loans, a few pitfalls, a few things to look out for, how it's different from a residential loan?
Yeah. So I feel like commercial lending is the wild, wild west. There's not all the regulations, that we have on the residential side. So it does allow us to get more creative and kind of build a deal however we need to build it. As far as differences go, we do a lot more work up front to be able to really say, is this deal going to make sense? Do we want to move forward with it? A lot of it too is because, appraisals cost a lot more, if we have to do any kind of environmental, checks. And
how much more?
We're dealing with a larger amount of money.
This is way delayed. It's hard to interject, but appraisals, how much is an appraisal for a residential, say that cost, and then a typical for a commercial?
Yeah. So appraisal for residential is about, say, $550, maybe $600. And for commercial, I've seen it, $3,000 to $5,000. So definitely a pretty big difference. That's a big chunk of change. And it's one of those things, once you pay for it, it's getting done, right? So we want to make sure that the deal makes sense up front and that the lender can actually do the deal before we start ordering all of these other things. Also, too, you're putting more money down, and it tends to be a larger amount of money. So, before people are putting hundreds of thousands of dollars down, we want to make sure the deal can actually get done. It doesn't fall apart later. So there's a lot more work up front to be able to, do the numbers make sense? Is the property cash flowing? Does the borrower have the funds to put down? Where are they getting that? What businesses are going to be leasing out the space? Those are all go into the equation. So it's a little different as far as like pre-approvals go than on the residential side, where a lot of times you're sticking to these 5 checkboxes and making sure that it fits.
So you mentioned the appraisal is more and more extensive. What's involved in a commercial appraisal? I know you're not an appraiser, but what more goes into a commercial appraiser that doesn't go into a residential appraisal?
Yeah, I'm definitely not a commercial appraiser, but I try to, surround myself with them, just because I feel like I can learn every time I'm talking to any of them. So I know they're obviously taking a look at other comparables, which is similar to residential, but if we're looking at say an apartment building, it's got a 15 units, they have to be able to find other 15 units, and they may have to go further out as far as the radius goes. They also want to see the rent roll. So, and then are people paying rent on time? What are those rents? Are they, fair market rents or not? If maybe the previous owner wasn't charging enough, is the new owner going to be able to increase rent, or vice versa? Are they just in line? So I know those are some of the major things. Again, further than that though, I don't know, because I'm not licensed appraiser.
Yeah. Well, they're using comps like the comparable properties like they would in a residential appraisal. And on a residential appraisal, that's pretty much where it stops. You look for similar sales, you get a few of them, you compare it to it, and there comes your price. But within a commercial appraisal, they do the comps, but also when you're selling a commercial property, it's a business really that you're selling. So they're going to look at the income and expense analysis. Like you said, they're going to look at the rents, both now and what they might potentially be, or how any value could be added. Can you, and investor is going to look at more, can I add a cell tower? Can I add another unit? All that kind of stuff. But the appraiser is going to look at some income and expense analysis and make sure it makes sense that way, because even you could pull a comp and say it's worth this, but then you could run the numbers and say, oh, wait, you can't ask that for it because the numbers don't make sense. You're losing money and it's not worth that. So a lot goes into it, and cap rates and all these other things that we won't get into. But essentially, they're not stopping at the comparable properties. They're also looking at replacement value and things like that, but really at income and expense analysis. And the bank is going to want to see, like you said, they want documentation of all that stuff. They want copies of the leases. They want the rent roll, any and everything they can get. They want a lot of times the type, the schedule, what is it, C or E from the previous people, or at least the investors want to see what they actually put on their taxes, not what they're saying the income and expense was, but what did you put on your taxes?
Right.
So you said more money down.
Yeah,
what does that mean?
A lot more paperwork. So normally with investment properties, we're looking at least 25% down. Some lenders, depending on the property type, especially, in COVID and post-COVID, they're going to probably ask for more money down on, say, on a hospitality, hotel, motel, restaurant even. They're really going to pick and choose if they want to move forward with those types of deals, just because they've been more risky. 2020 really hit those businesses hard. Whereas, say again, with an apartment building, a lot of times, those people have been paying rent and there is some history there. And so they may only ask for 25%. But like I had one deal I was looking at, it was a hotel, it was closed down. Lender was willing to do it, but they wanted 50% down. And I had a borrower that came to me and said, can you do this? I've gotten denied from other lenders. And I said, well, you're not going to love it, but yeah, we can do it. You just need to come up with more money. So, I mean, at least we had an option. It's not necessarily, always ideal, but something. It's better than nothing, I think.
Yeah, and essentially, it's the more risk, the more money you're going to have to put down. The bank's going to want to protect the money they're putting out. And in that 50% case, they're probably figuring, all right, if the worst case happens and we've lent out this 50% of it, we can at least recoup that out of it. So they're just looking at what they're putting out and covering themselves, and looking to LTV, loan to value, will change per property and per whatever it is. And then what are some other differences other than amount down? Are there different things to qualify? Do you have to have an LLC? Can you do it in a personal name? Whatever the differences are there between a residential and commercial loan?
Yeah, so normally commercial, we're doing it in some kind of LLC or business name. And those are easy. They're quick. You can start those up, right away. You can register an LLC in a day. So a lot of times investors will come to me and say, "Well, hey, I don't have an LLC yet. How long does that take?" And we can walk through that process. It's okay if it's a newly formed LLC. That's not a problem for the lender. Other things too, the money doesn't, on the residential side, money has to be, seasoned or, say in your bank account for at least 60 days. On the commercial side, it's normally, one day. They don't care too often where it's coming from, as long as it's coming from somewhere. So, whereas, like I said, residential, it's a little more strict who it's coming from. Is there a relationship? Um, so that's one thing. The credit score obviously is involved with the commercial deal that can a lot of times affect the interest rate, but in general, they care more about what's going on with, again, is it cash flowing? Is the business profitable? Is there experience in the investor? Again, depending on the property type, right? If they're going to be, buying a restaurant that maybe is more risky, does this person come from a restaurant background or are they starting this up? That's always going to go into it. To me, it's more the whole story, right? And I think that's why it's important. It's not just black and white. It's understanding what is going on with the property, with the investor, what's their background, and, how will them buying this building help them? Other things we can look at are, when businesses, if they buy a building that they want to own instead of leasing it, we can look at SBA loans where they can get, 0% down or 5% down. So less money down because they're going to be occupying the building, which will ultimately help the business grow. By having this much more, square foot, they can grow their presence or, get more revenue because they can sell more.
And also there's some kind of a guaranteed rent there. If it's an owner occupied, you know who the tenant is and they have a stake in paying the mortgage and all that stuff. Do banks look at owner occupieds more favorably than pure investments?
Again, it's going to depend. I feel like that's always the answer with commercial, but it depends on the property. It depends on the business, and the history of it. If the business is strong, yeah, I would say, especially if we're going SBA, it's going to be, we're going to be able to put a little less money down because of that. And again, there's a plan, right? There's a business plan. We can prove, kind of show based on projections, hey, this is what's going to happen with the business by growing into this space.
So if it's a brand new business, I'm guessing probably not going to help all that much because that business could fail and then the rent fails and then the mortgage payment fails. But if it's an established business that maybe has owned a property in the past or has been leasing successfully for 20 years and now they want to buy something, in that case, it probably helps a little bit and gives some security to it. Can you elaborate on why somebody might want to buy something under an LLC or a corporation or something rather than under their personal name when buying something commercial?
Yeah, so a couple of things, especially when it comes to multifamily, with the guidelines on the residential side, you can actually only have up to 10 properties in your personal name. The lenders won't even lend to you past that. Some are even tightening up more. Some of them I haven't seen often more than 7 or 8. So by buying an LLC, it's not in your personal name. It allows you to buy more properties. Also, there's less risk when it's in an LLC. Again, not a lawyer, so you should definitely contact someone about that, the pros and cons. But a lot of times, investors will buy, they'll start a new LLC for each property that they buy just because they want it all to be separated. And so that's something else that we can take a look at as well. Again, with each new business or each new LLC, there is obviously more paperwork, but that's definitely a benefit. Another thing, oh my gosh, I just blanked. Also, yeah. So if you're ever looking to buy a home, right, and if you've got an LLC that bought a property, that's not going to show up on your credit report. And it's not going to be included in your debt to income ratio. So that can be really important if you've got a business and you don't want that debt showing up on your personal kind of line item on your credit report. So that's another big reason why people do it.
Those are good reasons. You can buy more properties. Obviously, you said you're capped at 10 in your personal name, less risk. You avoid some of the liability. There's some, again, we're not attorneys, but putting something in an LLC or something kind of puts a barrier between you and things that might happen to some extent. And then the debt to income ratio when you need to go out and buy your own home or take out credit for yourself or other things. What do you have to do a personal guarantee sometimes? I know when we do big commercial deals with with a company that's really qualified and the company's buying it, we try to say to the bank, they're not doing personal guarantees no matter what. Don't even come to us with it. Talk to us a little bit about personal guarantees and when people will have to do it, when there's no choice, when they might not have to do it, and what a personal guarantee means too.
Yeah. I always hate to go back to it depends, but it does depend on the property. It depends on the business. Yeah, there are definitely, what they call recourse and non-recourse deals. So are you personally guaranteeing it or not? And so we take a look at that. That's what I love about being a broker is that we have tons of lenders to, depending on what you're looking for as a client, we can say, okay, you don't want that type of loan. You don't want to personally guarantee it. Okay, these lenders are going to offer these, programs for this type of property. And so that coincides with how much money are you going to put down, what's the interest rate, all of that. So that's a big part of the question when I talk to an investor and I say, what are we looking to do here? What's the overall goal? Obviously I need to know the numbers, but I also want to know the bigger picture because that way I'm matching you up with exactly what you're looking for and I'm not wasting anybody's time.
Right. And by personal guarantee, it basically means, you might be buying it. This business might be buying it. You might be buying it under this LLC or whatever, but we also want you personally to write your name on here and be liable for this mortgage and all the other stuff. So obviously it makes sense that the people would try to get out of it, but it makes sense that the bank, if it's a more risky deal, might want some skin in the game from you and realizes that you can't just go out and spend $500, create an LLC and then take all the liability off of yourself completely. Doesn't quite work that way. What about 100%? I hear, people out there, I can get 100% financing for commercial loans and you can kind of no money down, get into some kind of commercial property. Is that possible? Can you get secondary loans or hard money, so to speak, or how could you finance something with less money down, I guess is the question.
Yeah. So most of the time we're going to go, it is a thing. It is possible. Most of the time we're going to go, SBA. So the Small Business Administration is backing the loan. Again, I've seen some deals where it's as little as 0% down, which is great. The business has to have strong financials, of course, and has to have a strong history. But that is definitely an option. We can always look to, go with hard money. A lot of times, though, hard money, they do want more money down just because, again, but that's often a route we go if you need the money very quickly, say within 14 days or less, or if you keep getting denied because of credit issues. Or, again, the business just isn't cash flowing that much. It's definitely an option that we can take a look at to say, hey, we can't go traditional, commercial. We can't go SBA. We're going to look at hard money. Obviously, the interest rates are much higher, probably, 12, 14%. But it's a short-term loan. You're not going to be in that for 5 or 10 or 15 years. It's really more of almost like a bridge loan that's just going to get you into the property. And then we would refinance you into a more traditional type of loan once you're in the building. And we have more paperwork to show that the business is cash flowing, right?
Yeah. And actually that brings up a good difference, the length of the loans and how long your rate is fixed. And sometimes it changes with CPI and we could get into the weeds with all that kind of stuff, but talk about the term a little bit. With a residential loan, we know you can get your 15 up to 30, even past 30, I think some places, for a residential loan, 30 years and fixed rate the entire time, but it's not the same with commercial. So unpack that a little bit.
Yeah, so I almost feel like you can have almost any term that you want. Some people are just looking for, say, a 2-year bridge or, short-term 24-month loan. Some are looking for even a 5 or 7 one arm where, they know they're only going to be in that loan for a shorter period of time. I've had more recently, just because the rates are lower, people say, can you do a 30-year fixed? And that's not super common on the commercial side. Most, retail banks don't want to do a 30-year fixed. But that is something that we are able to offer. So, I recently closed a 15 unit. We did a 30-year fixed option, and that was great for the cash flow for them. They can always pay it down if they really want to, but ultimately they wanted to make sure that they were getting more cash flow. So that's another question of when I'm trying to qualify, what are you looking for? Is it short term? Is it, are you okay with a 5-year arm? Or did you want something that is also fixed?
Yeah, that totally makes sense. Do you want cash in your pocket now, or do you want to pay it off faster, or what's your goal? So in that 30-year, do you get a higher rate for extending?
Slightly. It's not crazy different. But yeah, sometimes the arms are a little bit, maybe like 0.375% lower. So that's what we always, we take a look at what's the goal here. How long do you think you're going to own this property? What does the cash flow look like with this rate versus this rate? Do you want to buy points? You don't have to buy points, but if some people are really sticklers on rates and that's important to them. Others want to kind of see the whole picture and what's going to make sense in the long term.
And what types of properties, what classifies as a commercial property? What would these loans be for? I'll let you expand on the multifamily, what classifies a residential and a commercial, and then what other types of properties, what other asset classes?
Yeah. So on the residential side, you can do 1 to 4 units in your personal name. And then on the commercial side, obviously 1 to 4 units in an LLC, and then 5 units and above is your traditional commercial for multifamily. Then, we also obviously have, retail, you've got your office buildings, which I know a lot of those are probably for sale right now, just due to the current nature of the world. Warehouses, which are super hot right now because of all the logistics. So warehouse, industrial, and then, you've got your specialty buildings. I'm working on a deal right now where, there's a client, I guess it's considered retail, but it's a very unique building. And a lot of times if we can't do it on the residential side, then we look to say, hey, is there an option on the commercial side? For example, maybe there's multiple buildings on one parcel. What does that look like? Can we do a deal like that on the commercial side?
So basically, you can buy up to 4 units, like a house, basically. If you intend to live in one, you can get a residential loan, 30-year fixed, FHA, conventional, whatever, a regular house loan for the most part. And then as soon as you hit 5 units plus, that triggers you need to go get a commercial loan as far as multifamily goes. And then you mentioned warehouse and industrial and logistics being a huge, huge market around here. That's always booming and always a good thing around here. And you also mentioned office spaces coming available. I think all the leases are still in place. As soon as all these leases start expiring and they start stepping back to 25% of the space they had before, that's when we're going to see a lot more offices come available for lease and sale and all that kind of stuff. And what about rates? We didn't talk about rates yet. What kind of rates right now are you seeing? Give us a little range or what people could expect.
Yeah, so on the commercial side, I do try to set expectations on that because we're often not getting a commercial loan for 2.5%. That doesn't really happen. Maybe if you do enough deals with your local bank, they can cut you a break on the rate. But a lot of times we're seeing, 4.5 to 5.5 is kind of the general range. Sometimes even slightly higher. Again, it depends on credit score and how much money you're putting down. And then, and oftentimes people will say, well, especially if they've never dealt with commercial, that seems pretty high. But oftentimes it's like you're borrowing $1 million. It's 5.5%.
It's funny what seems high right now. It's funny that you say that.
Right.
That's high.
Yeah. And yeah, I mean, if we all remember, and this was before I was in the industry, but my parents tell me about how when they bought their house, and their interest rate was 8% or 7%, and they were getting a good deal then. So it's one of those things. Like I said, are you rate conscious? If you are, then let's look at lenders that offer lower rates. If the goal is because you're getting denied from other lenders, and we could actually do the deal, then let's look at that. And you unfortunately might have to deal with the rate that we have. But hey, at least we're getting the deal done, which is ultimately the goal, right?
And are there, on the types of properties, Are there different asset classes that you like to lend on? Like right now, do you kind of seek out warehouse deals or industrial deals and kind of shy away from the office deals? Do you look at those like that? Or it just comes down to each property and the income and expense? I know it all depends, but.
Yeah. I mean, multifamily is really hot right now. Industrial is very hot right now. I'm working on an industrial deal in New Jersey currently. It's a $2 million property, and it's a solid deal. The numbers look really good, so very excited about that deal. Office space, yeah, it's who's currently occupying it, how much vacancy is there, what do the leases look like? Are they all going to be expiring next year? And what does that look like? Is there a backup plan to get new tenants in those buildings? So even, hospitality, it's kind of iffy right now. I know you could probably get some good deals as far as the prices might be cheap. It might be on sale, right? But you're probably going to have to put more money down. Again, it's all what's going to go on with COVID and how's that going to affect, people seem to be traveling a bit more. And it seems like, hotels are getting booked up, but is that going to be a long-term thing, or, what's going to happen in the next coming months?
And are there any mistakes, pitfalls, frequently asked questions, things you see over and over and over again with like everybody that comes to you for a commercial loan that you should tell people to look out for, maybe ducks to get in a row before they start going out and looking for a commercial loan?
Yeah, I think it's important to put together some kind of personal financial statement. That's oftentimes the first kind of first document that I ask for, because we need to see what's going on. What assets do you have? What liabilities do you have? What other properties do you own? Or, are you a first-time investor? Which is okay. We have programs for first-time investors. So that's the one thing that we really ask for. Most lenders are going to ask for that. Up front, just because that's kind of like the application for, on the residential side. Personal financial statement is what I look for up front. And just if you have a business and you're looking to get into an SBA loan, making sure that you have the documentation for that, 3 years tax returns, both personal and business. What does the profit and loss look like over the last 2 years? Especially with COVID, are you now up and running and now you're having a great 2021? That's great. We need to see the profit and loss. And then if it's an SBA loan, what's the business plan? What's the background, the resume look like? So just making sure you have your documents in order so that I can easily look through them and say, does this make sense to move forward? What kind of building are you looking to purchase? How much? And how can we structure the deal? What's the most important piece to you? So
the personal financial
in order.
Go ahead.
I was just gonna say, those that tend to be very organized and have all of their paperwork ordered, and they're not searching for their tax returns, or they have the balance sheet there. That's always a lot more helpful, and I can make a decision more quickly when that paperwork's all aligned. If I continue to have to ask for more paperwork, it's just going to hold up the deal. Doesn't mean we can't do it, just takes a little longer.
It's also a bit of an indication of how they're going to be paying their loan and just how they are as a business person. If it's really tough getting all the information and everything's always a day late and $1 short and not filled out quite correctly, then it's somewhat of an indication, at least it would be for me, whether they're going to be able to perform on the loan, et cetera. So it sounds like to me, the personal financial statement is kind of the commercial loan equivalent of a pre-approval. I know there is no quote unquote pre-approval for commercial lending, but if someone wanted to find out first if they could even buy a commercial property, let's pretend it's not multifamily. It's no, I want to go out and buy a Sheets. How do I know if I'm allowed to buy a Sheets? They can come to you with this personal financial statement and find out whether they can do that.
Yeah, we'll take a look at the numbers, and a lot of times I'll pitch the deal to a couple different lenders just to see, do the lenders like it? What does it look like? What would the terms be? How much would they have to bring down? And then from there, then it's a matter of, okay, yeah, let me know when you find a property you want to make an offer on. But you're right, it's not your typical pre-approval like on the residential side where you just, you're pre-approved for a certain amount. A lot of times it's the overall picture of the deal. What does it look like, and how can we structure it?
And then is the personal financial statement something, is that like a PDF document people could get and have and be able to see what information? Is that something you provide to people that they can see what they need to provide and kind of put the package together? How do they know what that is or what to do?
Yeah, great question. If they don't already have one, I can definitely give them a template. We've created one for them so that they can use, and it's pretty easy. It's just an Excel spreadsheet, but you don't have to use mine. It doesn't matter really, as long as we have everything broken down. Again, the big things are assets, liabilities, what other properties do you own, and how much money are you going to be looking to put down.
But if they use yours, then you're sure not to miss anything that you guys want, and you can be thorough. And that's what I like about that, because you can't trust other people to do the same thing. Awesome. Well, I like that. So let's talk about a little bit about what you guys do and what sets you apart from other lending sources. So talk about a little bit about how you can go out to different funding sources and you're not stuck to just one. Highlight that a little bit.
Yeah, so being a broker, we have a lot of options. That's part of the reason why we are building this commercial division, because we had a lot of investors that we were working with on kind of that 1 to 4 unit size. They wanted more. They wanted bigger deals and the commercial division. And there's not a lot of options out there. They might go to their local bank. They might get denied, or maybe the bank doesn't like that deal. And so I'm able to take a look at the deal. I'm able to shop it around for them. We work with hundreds of different lenders, depending on, again, what the deal looks like. And then we're able to come back and, provide options for them. Hey, this option is a 30-year fixed. It's got this rate and this prepayment penalty. This one is a 5/1 ARM. It's got a little bit better rate, but no prepayment penalty. And so then I let them choose. I always say it's not my mortgage. It's not my business paying for it. It's not my investment. So, I want to make sure that they have options. I don't want it to just be one option. And oftentimes we're able to provide that because we work with so many lenders on the commercial side.
Do you ever find that people are shopping deals? I mean, we used to, for the big deals, we would go around, we go to 3 or 4 of our favorites, and we would tell you specifically, we're getting an RFP for exactly what it is, a request for proposal. And then we look at all of them and go from there. Do you get a lot of that in the commercial world?
Yeah, I tend to see that, and that's okay. I'm not necessarily afraid if you're shopping. Again, you have to make the best decision for you and your business. So it's good to see what else is out there, and I think there's a space for every lender, right? Sometimes we offer programs that other lenders can't offer, and vice versa. So sometimes it makes sense and sometimes it doesn't. But ultimately, we want to give the investor options and make sure they're getting the best deal.
And then how do you find these funding sources? What are these? Are they banks? Are they funds? Are they individual investors or groups that have gotten together? What are all the different funding sources? I know you don't probably do that part, but can you give us some idea of hundreds? You say hundreds of lending sources. What are they?
Yeah, most of them are lenders, but they just don't maybe have a retail presence. So it might be a lender out in California that it might be hard for you to find, and we have a whole directory that we're able to go through and figure out. These top 5 lenders prefer this property type, this asset class. These lenders over here, they might prefer small businesses. So we're able to kind of go through and say, what does the deal look like? What's the goal here? What terms are you looking for? And then I can sort out which lenders to go shop and say, okay, hey, I've got this deal. This is what they're looking for. What can you provide me for a quote? And so we do that across the board. Most of the lenders you haven't heard of unless you've been really in the commercial game for a long time and you have tons of investments. There's lenders in every state. And again, that's a cool thing about commercial is that there's no, licensure restrictions. So I can do deals throughout the country. So.
And what was I going to say? I forget. I had a good question to follow that up with, and I just forgot. I'll think of it. Is there anything else that sets you guys apart that you'd like to highlight or anything?
I think the big thing is, really just being able to talk through a deal. I've had investors that say, I want to get into this. I don't know how. I'm an investor myself. So, I can tell you my story. We can talk about different ways to go about. I can get you connected to, different commercial realtors that I know that are, really good, focus on this type of asset class if that's what they're looking for. And same thing too, even I've got insurance companies that focus specifically on commercial insurance to make sure that they're getting, a good deal. So ultimately, I want to be able to be a resource, to the investor, even if it's more than just the actual loan. So
RSR does
always happy
appraisals,
to take a
just so
call
you
and
know.
talk through the details. Yes, the appraisals too. Although we really can't pick and choose appraisers. That's not something they allow us to do for good reason. But yeah, there's a whole network of individuals that I'm connected to that would happy to say, hey, even if we just need a second or third opinion, does this deal make sense?
And how do you search through all these lenders? So there's all these lenders. How do you even know which one specializes? Is there some database that you guys have that you can go in there and say warehouse lenders, and then it kind of pops up, or lenders that like longer loans or shorter loans or whatever the criteria may be? How do you even know that?
Yeah, so if you've ever heard of the Scotsman Guide, that's where most of the lenders are. But a lot of times, again, what I've done is I've built up, the database of the contacts and the people, the account reps that I like to work with that are going to move quickly and get me a quote, turned around for me so that I can get that to the investor so they can make an offer. But you can drill down on that. They've got a website. They actually have a huge magazine. It's a huge booklet every month, and they highlight different lenders, different specials that are going on. And oftentimes they want, they're broker friendly. They want to work with brokers. They would want the investor to go through the broker. So we work with a lot of those lenders.
Awesome. And I'm sure over time you just kind of know which ones are good for what, and you have relationships with people, and you can get things done at the ones you do stuff at a lot and all that kind of thing. So before we go to our funny question that has nothing to do with anything, tell us a little bit about who your ideal client is. If somebody wants to reach out to you or knows somebody, who are you looking for?
Yeah, ideal client. So any new investor that has never done it doesn't know where to start, feels maybe overwhelmed with the process, someone who's very interested in learning, always happy to teach. I think that's a fun part of the job, is just the education piece on it. I know oftentimes new investors can be intimidated by the process. And yeah, sure, it's a different type of process than buying a residential house, but it's still real estate, right? It's still a loan. So the process is you still go through the same steps, just maybe in a slightly different order. So new investors, of course, and then, any other investor who wants to see other options regarding, loan. Like I said, I've gotten a lot of calls lately because people are looking for that 30-year fix, where they say, I haven't been able to find anyone that can offer a 30-year fix for this commercial property. Give me a call. Let me see if I can price it out for you and see if it makes sense. I'd love to just connect with investors in general.
And it sounds like that was a new purchase on that 30-year. Do you do refinances too? Is that a big thing right now with rates so low? Is that something people should be thinking about if they already have a commercial loan, or they're coming up on that 5-year balloon payment or whatever, and they need to refinance?
Yeah, that's definitely something we've been doing as well. Refinancing to get a lower rate, or to maybe extend that term, or people are taking advantage of the fact that there's equity in their properties, and so they're doing cash out refinances so that they can maybe buy another investment property. We've been seeing a large amount of those deals come across because the values have gone up, and again, people want their cash, they want their money, so. It's a good thing.
Yeah, you could use it to build your business or scale, or I suppose you could buy a boat or something. I wouldn't do that, but you could cash out and get something else. All right. So what are we at? 10 minutes. Good. We're in a good time. Let's do funny question. There are 81 on this list. I literally just Google funny questions, and there are 81 on the list. So pick a number between 1 and 81. Not number 7, because that was yesterday.
Okay. 24.
24. All right, here we go. Although number 7 yesterday is my favorite question of all time, but 24. What is the worst song ever? Huh.
That Baby Shark song. I hate that song.
But you don't have any kids though, right?
No kids. But I have nieces and nephews, and it's a cute song, but it just gets played too often, in my opinion.
Yeah, when you have kids around, a lot of stuff gets very monotonous over and over and over. They play stuff out like crazy, but yeah, I could see that. And the Baby Shark is particularly annoying because it's literally the same 4 words, or it's 1 word, 2 words. Baby Shark, unless you count the doot to do to, right?
Great, now it's in my head.
Good. We should play it at the end, or I can't. We'll get blocked. All right, cool. So tell everybody where to find you. I'm going to put your information up here, but read it aloud so everybody that might be listening later on audio knows where to find you.
Yeah, so you can go to our website, KeystoneAllianceMortgage.com. And on that website, there will be a drop down where you can click on for commercial loans. Obviously, we do both residential and commercial. You can also email me, Melissa@KeystoneAllianceMortgage.com. I know that's a handful. And then, or you can call me, 717-860-0505.
Yeah, she's super responsive, easy to get in touch with, and all these things will be in the descriptions and everything. So links to be able to click, and if you need to email her, you can just grab it there. And also, before we go out, I want to bring up the comments because, and I want to talk about a little bit of the history of your company and where it came from, because your owner here is all over. Well, we got a comment from Anastasia as well. Thank you for commenting, Anastasia. But he was nice enough to comment in 2 places. So he knows social media, and I see him on Instagram all the time, and he's still in Puerto Rico, I assume, showing pictures of the beach and whatnot. So I'm jealous, but he was nice enough to comment on LinkedIn and Facebook. So props to Andres. But tell everybody a little bit about him and where the company came from. And if I'm correct, he is the owner.
Yes, he's one of the owners. There's another owner as well, and her name is Megan Marsh. So Megan is in Erie, and Andre built the business in Harrisburg and State College. We have offices there as well. And then he now is building, he has an office down in Puerto Rico. He lives down there. We're the only residential mortgage brokerage company in the country licensed in Puerto Rico, and we're able to help through that process as well. So definitely breaking some barriers. One of the things that he's always taught me is just, staying in communication with real estate agents, just because, they're part of the deal. And a lot of times people are not keeping them in the loop. The other thing is just people over profit, making sure that we're taking care of our clients, we're responsive, we're staying in touch, because the whole process is stressful, whether it's residential or commercial. And we want to make sure that everybody knows exactly what's going on.
Yeah,
he's been
he
in the
always.
Industry for.
Go ahead. You go.
I was just gonna say, he and Megan have both been in the industry for 15 years. They've seen a lot, and we have great mentors here to be able to teach us, how to restructure a deal if we get stuck, or how to get creative, who we need to call. So both he and Megan have been great resources for me as we build this division. Again, this came out of the works from a lot of our investors that would call us. We would do their residential homes, or they'd be self-employed, they'd want to buy a business, and there was just a need. And so that's part of the reason why we're building it.
That's awesome. And I like I said, I follow him on Instagram, and he always seems like he's pushing and grinding and trying to improve and doing all kinds of stuff. So I know you're in good company there. And also, so Puerto Rico, there's some tax benefits to living there. That might be one of the reasons he's staying there at least 6 months of the year, whatever you have to get said tax benefits. But which is great. No, whatever. But are you guys bilingual? If somebody had a Spanish speaking, do you have people that can work with that? Because I have that time, and I don't have anybody to really send them to.
Yeah. So we have a number of team members that are fluent in Spanish, Spanish and English, of course. So it definitely can help anyone who, maybe has a hard time speaking English, would prefer someone speaking in Spanish. We have a whole team that can help with that. And yes, definitely Puerto Rico. He's building that down there. And there are tax benefits. He lives there full time now, but he comes back quarterly. And we're able to, a lot of people are moving. He's telling me a lot of people are moving to the island, which is a good thing. It's part of the U.S. You don't need a passport to get there. You just need your driver's license. And there's some pretty cheap flights, actually. I was checking them out the other day because I'm ready to take a vacation.
You should. It's pretty nice. I was there once. I highly recommend. They have, I think they call it the longest zip line in the universe. It's called the Monster or something. But it is very long. I took a video of mine, and then I was watching a couple weeks ago, and I actually thought my own video was fake because it was so long. It gets boring. It's so long. So I highly recommend it if you go there. You got to drive up into the mountain on this tiny road, and you think people are going to hit you, but they're flying past you. It's crazy, but it's very awesome. This kind of modern adventure complex up at the top of a mountain. Very fun. I highly recommend it. All right. So let's go out here. I think we're done. If anybody's interested in a business spotlight package, feel free to hit us up. That consists of Greg coming out to your business, showing behind the scenes how the sausage is made. You saw him at the Ninja Warrior place, kind of trying the warped wall, and seen him at some other places. And then you get an interview and talk with me here. It's not a marketing talk anymore. It's just an interview now. We used to talk about marketing, but it's just a business spotlight now, like you're seeing here with me and Melissa. And you get a networking mixer at your business. COVID, well, that's not really a thing anymore, hopefully. But your business permitting, if you have a business, we can do one. But actually, we've done one in a park under a pavilion before, which is actually really fun. So even if you don't, maybe you could host a networking mixer. Hit us up if you want to get one. If you're interested in our special offers, join our email list. It's one email a week, and you can join that at supportcentralpa.com. Join our Facebook group. If you're watching this on LinkedIn or Instagram or any other place other than Facebook, please head over to Facebook and join our Facebook group, Support Central PA. Central PA supports small business. The website is different from the name of the thing, which bugs the crap out of me, but Support Central PA or whatever it's called. Go over there and join it. A lot of good stuff happening over there. Contact me if you need to buy or sell a house. Like I said, we need inventory really, really bad. Text me, email me, throw a rock through my window, send a carrier pigeon, whatever you need to do. We need inventory. Remember to support Central PA small businesses. Thank you for watching and listening, and say goodbye, Melissa.
Thank you so much, Derek. This was awesome.
Thanks, everybody. See ya.